Welcome to the Fintech One-on-One podcast. This is Peter Renton, chairman and co-founder of Fintech Nexus. I've been doing this show since 2013, which makes this the longest-running one-on-one interview show in all of fintech. Thank you so much for joining me on this journey. Before we get started, I want to remind you that Fintech Nexus is now a digital media company. We have sold our events business and are 100% focused on being the leading digital media company for fintech. What does this mean for you? You can now engage with one of the largest fintech communities, over 200,000 people, through a variety of digital products: webinars, in-depth white papers, podcasts, email blasts, advertising, and much more. We can create a custom program designed just for you. If you want to reach a senior fintech audience, then please contact sales@fintechnexus.com today. Today on the show, I'm delighted to welcome Diarmuid Thoma. He is the head of fraud and data strategy at AtData. And what we're going to be talking about today is a little bit different. We're talking about email data. Now, we've had fraud people on the show before, and we've done lots of webinars on fraud as well here. But this is the first time I've ever really dived deeply into email data and how rich that data can be and what information you can garner from it. It was truly fascinating. I learned a lot in this episode. You know, we talk about, obviously, the use cases for email data, where it fits in the funnel when you're doing, like, for example, a loan application. We talk about how many email addresses they're tracking, the percentage of all emails out there that are part of the AtData system. It's staggering. And then we talk about, good emails and what information you can get from good emails, and, of course, the bad emails and those that have really been set up for fraud, how you can detect that. It was a fascinating discussion. Hope you enjoy the show. Welcome to the podcast, Diarmuid.
Thank you, Peter. Glad to be here.
Okay, so let's kick it off by giving the listeners a little bit of background about yourself. Why don't you give us a quick introduction to yourself so we know a little bit more about you?
Well, I guess you probably tell by the accent, but I'm Irish and based and live here in Ireland and in Cork. But in terms of my background career-wise, it's pretty much exclusively fraud prevention, actually. So I started out in banking thinking, that was going to be my future, and did, financial services in college and so on. And I think within about a year of working in actual banking, I discovered, no, I didn't enjoy this much. So I segued into, with credit, but very quickly, I turned into kind of fraud prevention. But this was 23 years ago, in the early 2000s, right? So, and to be frank, nobody had a job in fraud back then. It wasn't really a thing. So just kind of figured it out as I went along back then. But I liked it. It was very kind of interesting. It changed a lot and kind of suited my, I think, personality. But so working in, I think, Hewlett-Packard actually back then, in the early days, in their fraud prevention stuff. But so when I kind of started building, I was like, okay, this is getting interesting. So went from commerce fraud to telecoms fraud, and a few years there. And then in the very early days of Facebook, joined them. Actually, I think there's about a few thousand people in Facebook now in Ireland, but there was 5, I think, when I joined. Wow. There. So 5 or 6 on the floor, big empty floor. And so, yeah, I was there for a couple of years, and then we started a fraud company. It was kind of one of the founding members of a fraud company called TrustDev. And we built that up in a few years, and we sold that to TransUnion for, I think it was $44 million, I think it was. And then it was the kind of global product fraud side for TransUnion for many years. And funnily enough, a customer of now AtData, or TowerData as it was then. And that's kind of how I ended up here, actually. So about 2.5 years ago, after speaking with Tom Burke, our CEO, and kind of convinced me that to build out the fraud side here. So 23 years kind of goes by quick, but
interesting. Okay, so tell us a little bit about AtData and TowerData, I guess it used to be called, but why don't you tell a little bit about the history of it and how you describe it today?
Yeah, so going back, it was actually founded by, as I mentioned there, Tom Burke, our CEO, our current CEO, in 1999. So, well, TowerData was. And so primarily starting in like email validation, checking, pinging that, making sure the email's valid, deliverable, etc. On the mostly for marketing services and stuff like that. That company just grew and grew, and so we'll bring it into 2022 to the point where it had thousands of customers already, global kind of reach already, processing billions of emails. But to bring it even further, we merged TowerData, as it was known then, and Fresh Address. So two of the kind of pretty big players in email validation space merged in 2022, and that's effectively when the rebrand happened as well. So as it was kind of I suppose a rebirth, almost like instead of a rebrand, because it was the signaling of a very different change of direction for both companies as well. It's when I joined, and to heavily kind of invest in fraud, and then also into kind of new technologies like which we cover, and it's like AI and the ML technologies, and we've really doubled down on that and expanded. It's probably been our fastest and biggest expansion is on that side. So yeah.
Okay, and so you sort of lead up the fraud activities of or the anti-fraud, I probably should say, activities at AtData.
Don't worry, I do the same thing as like, oh, I work in fraud, but yeah, no, fraud prevention. So yeah, primarily it's the fraud and data science side of things is what I look after,
Right.
because the two are pretty tightly coupled. That's been the biggest expansion, as it were, for the company, right? Is that the company's always had huge resources from a data perspective, right? And again, wealth of customers, and both companies did, I guess. But the change has been to use that and use the AI and use the ML take capabilities that I brought, and to bring it into a new kind of age. And that's exactly what we've been doing for the last couple of years. It's been very, very exciting. But myself, what I do is largely everything, is develop the new fraud products, the new fraud features, and we've been rolling them out pretty fast in the grand scheme of things. I suppose is that like we have new technologies around domain risk, and new ML models, all of this. It's basically us trying to keep up and keep up with the industry, but keep up with the fraudsters and keep up with customer needs and demands. And then, and talking to sales. And one of the things I do try and do a lot of, actually, it does take up a lot of time, but it's definitely worth it, is speaking to the customers, speaking to the, within the sales process, but post-sales process, to seeing what their challenges are, seeing what's new in the market, seeing what's not there, and what we can do. So that's a lot of my time, and the odd podcast and webinar as well.
Right. Right. Okay. Well, maybe you could tell us what are the industries that AtData serves? So I imagine this is some of this, you'd mentioned marketing services before. I mean, this would, go across industries, right?
Yeah, and it's probably the simplest way to explain it is that in its current form, we have kind of two main, divisions within the company, and that is the MarTech side and the fraud side, right? And they're distinct from each other. In like, obviously, we're both doing kind of the excellence of email, but they have the very different purposes. So on the MarTech side, we're very focused on deliverability, quality of customers, including, cleansing databases, enhancing databases with names, address, and stuff like that. And it's a huge part of the business, obviously with what Fresh Address did as well. Then on the fraud side, it is all on the fraud prevention side. It's a very, very different demographic in terms of their clients, and different the cost, obviously, of what we're dealing with is a lot different in the fraud side as well. So the variety of customers is expansive. I mean, you're talking, so from the largest Fortune 500s down to the smallest kind of mom and pop shops on the street, so it couldn't be more diverse from a client base perspective. But from a use case, it's primarily those two.
And so within financial services, I'm curious about kind of the use cases there. And we obviously know that emails are a critical piece of anyone's identity these days. But looking at the financial services use case, why should banks and fintechs care about email address data?
They don't have to take my word from it. Like it is the most important PII element when it comes in the digital world, right?
Right.
We're used to very our names and our addresses and stuff like that being important, in the physical, but like particularly post COVID, everything vast. Like from my perspective, and now I certainly do, the vast majority of my dealings are all online now. So for digital, email is one of the most consistent elements within that. I've had mine since I was about 16 and I haven't changed it. And it would be a big pain to change the email, so it's very consistent, very sticky. It's also it's very useful, in that I need it every day to do my insurance. I might need it to do my banking, but always need email, and it's always there. But from a fraud perspective, that is where it gets interesting, right? When you think about, you said lending, right? So in a modern world, right? So if I'm going for a loan, I'm not going to go into a branch. I'm going to do the application online, right? And that's, for the vast majority, that's the way banks and fintechs obviously are doing it. What's the point in doing a name and address check? I'm not sending the money there. I'm not sending any check to the house and the name. Well, as a fraudster, I can write down any name and address I want, So that really doesn't have any bearing. You have to think about, from a fraudster perspective, what are the elements of that application that they need to be theirs, in their control. So one, the receiving bank account, right? They need to be in control of that, because that's the goal, is to get the money to that account. The other thing is, well, they need to be in control of the communication, which is primarily email. So they'll either have compromised it or just, in most cases, just created a new one. And that's where we come in. We say, like, no, this email was only created yesterday, despite what they say, and it's coming in from this location. It has no activity until now, this application. So that's just one kind of nuanced one for, in terms of lending, but like, there's so many applications, and it is, even when I was a customer of TowerData, using this data in TransUnion, it was by a good margin the most consistent fraud predictor and correlator in terms of our models that we were running then.
So just because you created an email yesterday doesn't necessarily mean it's
Correct.
fraud, right? You could just say, right, I'm done with my email, I'm switching to a new service, and you have to do something for the first time. So, obviously it's only one data point. How do you kind of dig a little deeper here?
Yeah, so it's not just like, as you said, at some point every email is new, right? Now, I will say, for the vast majority, the frequency of change is low, right? You do generally hold on to your emails, and there isn't kind of new versions of that coming, but for the most part, it's low. And we're not saying, we never, like, in a product, we always say email risk. We're not saying email fraud. We're not saying just because you have has it increased the risk associated with this application or this whatever transaction? Yes, it has, right? But you're right in that we can't just base it on that, and we don't. We have other variables. Let's say we take into account the domain, we take account into the location they're coming in. So we also take in, like, IP data and stuff like that that's coming in as part of that application, and it's all kind of weighed up as part of that. But critically for us is that we are an AI ML house, right? And we can actually tune to our customers, our individual customers' demographic. What do their good profile customer look like? And we train the model to that demographic uniquely. So our accuracy is pretty exceptional because of that. So there's false positives, yeah. There's always false positives in everything that in this industry, but they are certainly very limited.
Okay, so then, what's the size of your reach? Like, how many email addresses are you tracking?
When we talk about the count, it is billions, right? Every month we're processing about billions of emails. However, I never kind of, there's a lot of companies that say, well, our database is 16 billion or whatever. And I was like, that's kind of meaningless to a customer or to a company, because how do I know that those billions apply to my demographic? So the way I explain it to most of our customers, I said, all right, let's say they're operating in North America, and say, right, when you send us your emails, 99% of the time we've already seen them. That's our reach. So only 1% are considered new, and will never be 100%, because there is, as you said, a certain demographic that genuinely are new. Now, a lot of them are fraud, but our reach is pretty expansive, and that applies globally as well. So for the most developed countries globally, we're in the 90s and high 90s in terms of our recognition rate, where we've seen them, and that goes back decades.
And so, like, how are you building that database? I imagine, like, every time a client will send you their emails to do some verification, that, like, the 1% that are new, it might be someone who's, turned 18 and never seen the email address before, and they're doing stuff. That is that how you're building your database?
Yeah, basically, yeah, yeah. So the benefit of being quite large and having a large customer base who send you a lot of traffic is that you can derive. So the product, effectively, the fraud product is a byproduct. It's that's what it came from. So from our validation company, it's the being able to see all this activity, and you're like, oh, and a couple of early fraud companies started adopting it. Without necessarily that being its use or intention, but saying, "Oh, I'll use that," and it just exploded, and now it's almost an industry in itself.
Right, right. So, are there certain high risk domains when it comes to email addresses? I mean, everyone's got a Gmail address, it feels like these days, and you've got Yahoo and the old AOL and that sort of thing here. How do you know when this is a disposable email address, or are there high risk domains that you actually deal with?
Oh yeah, I mean, I published a blog on this actually because this is one of the biggest changes in the industry over the past few years, right? So back in when I was managing kind of fraud platforms, you knew there was always disposable domains, and they're not created for fraud. They're created for legitimate purposes. And you said earlier about, I just don't want spam. I don't want all that. So I'll just use this disposable email and that's fine. And that's their use case. However, they are adapted for fraud and massively so. But they were still manageable, like in terms of how many domains are out there. You're talking whatever about a couple of million, maybe a year, new ones created, and that still sounds a lot. But in COVID, I mean, everybody knows mass migration to online, and but also mass increase in fraud universally across every industry. And we trend obviously the numbers and stuff like this, and that went from about 900,000 domains being created a year to 2.2 million in the space of a couple of months. That's not domains all, that's just the high risk domains, right? So that's 2.2. But
Wow.
today that figure stands at about 3 points, nearly 3.5 million every year. So for context, that's 100,000 new domains today and
Wow.
100,000 more every day at high risk domains. And that's been the change, right? It's a very interesting kind of behavior because what it means is now the domain itself is disposable. So, you think 100,000 is a shocking number every day. What's even maybe more shocking is that about 43% to be specific, of those are only active for about 2 weeks, 3 weeks
Mm.
max,
Wow.
and they're gone. They're never seen again. So the industry problem was that by the time most companies had classified them as high risk or disposable or whatever, they're gone. They're done because it took about 6 months to apply that classification. So that's why they were so prolific. We spent last year working on kind of new technology that would basically have real-time classification immediately. The first email of the first millions of everything, and it would be classified there and then. So we released that actually a couple of weeks ago. So we're quite excited about that. But yeah, that one has been I think is quite a shocking in terms of the industry impact it's had. And I don't say like all disposable are fraud, but it certainly is a big, big factor in the fraud industry.
Right, right. So I want to go back to sort of the use cases for financial services, and it sounds like you have an API now, and you've released a real time update to that, which obviously that's fantastic. How do you actually work with financial services firms? You talk about email risk. Do you provide a score for each email, or what are your clients getting back?
It's primarily and almost exclusively API based, right? So it's a real-time API. Generally, like we can go, it's incredibly fast. For the most part, it's about 500 milliseconds thereabouts, or faster if we need to be. What's returned to them is quite a lot of data actually. We only need an email, but we can return back a huge amounts because I mentioned at the start, we have a very wide base of customers, right? Some of them are just regular stores that need some help on their online shop, so they're small volume, and some of them are super mega, fraud platforms or payments platforms and stuff like that. But they don't want just a score. They want the score, yes, but they want every piece of data that supports that decision. So we return it all as part of that. And that score is basically our customizable models running and producing a profile risk back to the customer. In terms of the actual banks and how they use it, so the deployment, generally speaking, so if we think of, the loan application, I suppose is the most common one, and that could be card or it could be anything, but it's the most common use case for the fintechs or banks. We're quite early in the funnel because
Right.
not only are we quite effective in terms of the fraud prevention side of things and quite accurate, we're incredibly easy to install. It's a very, it's quite a small product in compared to some of the big platforms out there. So it's quite easy to install. But most importantly, I suppose for them is it's cheap compared to a credit check, for example,
Right.
or doing that. Because again, logically, why would you do quite an expensive credit check on a fraudulent application? It's just a waste of money. You're going to kick it out anyway. So that's why we're generally speaking quite early in that funnel. And we give back a lot of, for those companies who are really maximizing, we give back quite a lot of information for their client demographic. What type of emails, where are they coming from? Are they coming in on mobile? Are they coming in, location wise? All that kind of data is returned in the API response. So it's quite a rich data set for not just fraud, but for general, KYC type stuff.
I was reading about piece of news you did. You that recently launched the AtData quality score. Is that the score we were just talking about? I mean, what is that exactly?
Interestingly, no, so this is a kind of personal favorite of mine, because it is the polar opposite of what we were talking about,
Okay.
right? So yeah, so it has similar DNA, right? It is a full model based product, right? But we've been talking, let's say, in terms of the fraud, how bad is an email? And we have a score saying from 0 to 100, and 100 is really, really bad, and that's high risk. Well, the quality score is the other end of the spectrum. The quality score is designed to tell you how good potentially a customer is. So if you imagine them, and that's been the AtData kind of mantra, and it's been what we've been trying to achieve, is that when it comes to email, we're it. We can tell you everything that can possibly be told about an email, and that's what this is. So you have the fraud. So let's say, if you're looking at it from a flow point of view, the fraud has kind of come in and said, yeah, okay, we've gotten rid of all the bad actors and that's it. So now we have all these ones that didn't score badly for fraud. But I'd like to know, how good are these guys? So, for example, how engaged are they? Do they read all their emails? How active are they? And maybe they haven't been seen in 3 years, or before now. And then I suppose critically, and this is where it gets kind of really interesting, is how likely are they spent to spend a lot? Are they big spenders when they do come in? And we have this is all still AtData data, believe it or not. So if you're, again, we'll use the lender. It's a consistent theme here. If you're a lender and you have a credit limit, let's say a short-term lender, and you have a credit limit of new loans for $1,000, let's say. But we can run the quality score and say, well, they've very high activity, very good email. Propensity to spend is very, very good. So maybe we make that 5,000 for this, so it's a pre-qualification kind of tool as well. So, and that's on that side, but we also, because one of the reasons I like the product so much is it's so flexible. We can deploy it in a marketing context, and then it helps deliverability. It helps, sales enablement. It helps all of that for that context. So we can actually change the meaning of good for the product, depending on
Interesting.
the client's requirements.
Yeah.
So yeah, it's a cool one.
You're gathering a lot of that from the transaction data, right? And you're getting a lot of payments data
Yeah.
from your database of customers.
Yeah, and like the product is designed to evolve. It's in that, so we've designed it to be flexible as it evolves into the future. So, for example, like a definition of good is different depending on the industry. So, fintech versus industrial versus ecom versus that, they'll all have different versions of good. And so we'll effectively end up with different versions of that. So, and that data is going to grow and grow.
Got it. Okay. I want to go back to the data science hat. I'm just curious about, you've talked a little bit about, AI, but maybe you could just sort of tease that out a little bit. How is AtData using AI to build your deliverability and your fraud models?
It's funny, as I explained, having come from kind of not using it much at all. If I was to say today, it's pretty much now in our DNA. It's almost embedded, like the modeling and the feedback and all that is now pretty much embedded into every product we have. Like I was talking earlier about like our high quality data, and we've had that, and that's great. And but what the AI has allowed us to do is take high quality data, because remember, it doesn't matter how good your AI is. If you've got crappy data, your AI is going to be pretty crappy too, right? So because we had that from the get-go, we were already at having, head start. And so by able to applying all of this, we were able to bring our products into kind of places where nobody else had, or even us had conceivably, done. So when we look at like the fraud, the fraud customization and the modeling, like the data can be got, there's other places maybe, but the levels of accuracy that we achieve now, all because of that customizable modeling and all because of the uniqueness of those decision elements is unmatched. There isn't anybody that can come close, and that's what it can do. And we still only think we're getting going. Like as I said, it's in every product, but it's just getting going, and we're
Right.
expanding. I think we have new data science starting today or tomorrow, actually.
Okay. So you released a white paper fairly recently, which I will link to in the show notes, on the balance between customer experience and fraud prevention. It's always a dance, right? So what are some of the key takeaways from that white paper?
And you say dance, I think I'd probably describe it as a battle half the time,
Okay.
because growing up in the fraud industry, it's always like fraud versus sales, and the two are like that all the time, because sales look at the fraud department as a barrier, as they're the sales prevention team effectively, But to be honest with you, now fraud has evolved, fraud prevention has evolved so much. If that's still how you see it, then you're doing it wrong,
Right.
because a good fraud strategy, a good fraud systems, yes, they should be able to effectively and accurately take the risk out of the transaction or the whatever you're doing. But because they are there, they should be able to enable new revenue, right? And that's what the article, it's a long enough article or white paper about it, but effectively that's what it's about, is that the balance between it, and you need to be able to deliver that to customers, right? You need to be able, customers' expectations are rising. Everything is rising, right? Fraudsters' technologies are rising. The customer's expectation of what their friction they tolerate is getting smaller and smaller every day. And the businesses, they expect those services to get more advanced and cheaper every day, So everything is going up. But, the thing is that effective fraud strategy should be able to open up new doors to a business. So markets maybe that they thought were too high risk, products that they thought were too high risk, etc. If you have a manageable fraud system, you can open that. So it really is changing, and it has not everywhere yet, but it certainly is looking that way now.
Right, right. What are the trends that banks, fintechs, and others should be paying attention to here when it comes to email data?
So the big one for the last question, is it?
Yep.
Two, I think, come to mind. Like the first one is kind of what we've been talking about, right? Because it's current, but it's emerging, is the high risk domains. Like I said, that wasn't as big as it was a couple of years ago. That was manageable a couple of years ago. It's exploding now. And they have to keep in mind, these aren't just like high risk domains and for disposable. These include like spoof domains, So, for example, it's a simple one, but we have just over, I think it is, 100 versions of Gmail on our active. So we have Gnal, Jamal, so many different combinations you can possibly imagine. But we have spoof banks as well, versions of the big banks that are out there, and they try and replicate it to make it look like that. And we see these emails. So that side of it is increasing at a rapid rate. Every customer I speak with today is saying, yeah, we struggle with this. So that's something that they need to have, make sure the measures are there, make sure they can deal with it, and make sure they understand what they're dealing with when it comes to that, because it's still gaining momentum on that side. The other is a bit more future state, I suppose, and long term. But we talk about it, we see it in the news as the advent, and we talked about it here, about the advent of AI. And it's what it's doing to all the different industries, and how it's changing what we do. But keep in mind, fraud itself is an industry, and I don't mean the fraud prevention. I actually mean the fraudsters in this case, right? And they're using it, and they're using it to increase their scalability, because that's what they do, right? They're all about scalability, efficiency, right? They're just like a business, so they are also leveraging it. Now, we don't know exactly yet how that's going to manifest itself in different. We've seen it already. We've seen much greater scale in terms of like email tumbling, which is like the changing of an email to appear different and things like that. We've seen that being scripted, automated, massively automated. So, you see thousands and thousands of them come in every couple of seconds kind of thing. So we're seeing that evolution now, but it's just the beginning, you know? So for the banks and for the finance industry, making sure you're able to cope with that shift, that scale, that your system that you have in place isn't just built to deal with your current fraud problems. It needs to be future proofed. It needs to be able to adapt quickly, because those trends will happen, and you'll be surprised how quickly you get hit by one of them. So if they have that flexibility to take in a new data feed, or just maybe change their existing one to cope, then great, fantastic. Or they have alerting. So I think they're the two biggest ones that there's probably 15 others I could probably list, but they're the two that come to mind now anyway.
Okay, well, Diarmuid, we'll have to leave it there. That was a really interesting discussion. I learned a lot today. I'm sure the audience did as well. So thank you very much for coming on.
No, it was a pleasure. Really, really was.
Well, I hope you enjoyed the show. Thank you so much for listening. Please go ahead and give the show a review on the podcast platform of your choice, and go tell your friends and colleagues about it. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye.